Welcome back, 608. It's been high, it's been low, it's tanked, it's tried to rebound. I mean, we're on a big-time roller coaster ride. Yeah, and if you've been brave enough to look at your investment statements or your retirement accounts, you probably noticed the roller coaster ride the Dow Jones Industrial Average has been on. Jim Huntzinger from the Bank of Oklahoma is with us this morning to tell us if the Dow is finally over the 10,000 for good. What do you think, Jim?
I hope so. Look at your 401k statements. Yeah, look at your statements pretty quick here, just to make sure you can see that number on there. But yeah, it's been crazy this year. Been very volatile. 10,600. We moved above 10,000 earlier this year and kind of accelerated now. Nice little run that we on in the market right here. A couple hundred points yesterday. Market feels really good right at the moment. But I have to say that things are obviously, you don't have to be an economist to figure out that things are dicey in here, and consumer confidence is still pretty weak. So nice little run that we're on right now. Let's hope that it sticks. I don't know. Certainly we could get some bad news from the economy and see the market right back down to 10,000 again.
So what do investors do? Because it seems like, there's nothing's predictable about the market, and that's kind of the unnerving unknown.
Well, it's certainly true, maybe in spades right now relative to more normal times, I guess. I really think that people have to stick to what they think is their appropriate long-term asset allocation. And I'm talking about the difference between how much money you have allocated to cash, to bonds, and to stocks. And this is not a market where you can kind of go all in and say, yeah, I really like what's happening right now in the equity market, and I think it's going to go from 10,600 to over 11,000 here in a few weeks. I just don't think that that's the case. So I think people really need to stick to what they think is their right risk allocation in their portfolios.
But Jim, I was reading an article yesterday, and if you read, every article has a different opinion, but I was reading one article that says, hey, it's a great time to get into the stock market and buy, because they're showing that stocks that were bought during recessions tend to pay off more after the recession is over.
Yeah, so it's a natural way to think of things, though, because during a recession, things are terrible, right? I mean, people feel horrible about themselves, about the situation. The economy's in bad shape, and usually stock prices are cheaper. And stock prices right now, even after this little mini run that we've been on, aren't all that expensive. And so it's possible, I think, for people to think about the stock market in a positive way here. If they have a long enough time horizon, it's probably a great time to be buying stocks.
All right. And didn't Warren Buffett say, when people are greedy, be fearful, and when people are fearful, be greedy?
Yeah. Jim, we're going to be checking back with you in about 20 minutes to talk about the possibility of the dreaded double dip. So
I mean, you hear that every day. I mean, almost. When's it coming? All right.
Thank you, Jim.